Welcome to GRE. I'm your host, Keith Weinhold. I sit down with a longtime White House occupant who was the official economic advisor to an ex-president. We get the real deal on tariffs and what they mean to you. Trump gets called out and the ominous sign about what's coming 6 months from now. Today on Get Rich Education.
Since 2014, the powerful Get Rich Education podcast has created more passive income for people than nearly any other show in the world. This show teaches you how to earn strong returns from passive real estate investing in the best markets without losing your time being a flipper or landlord. Show host Keith Weinhold writes for both Forbes and Rich Dad Advisors and delivers a new show every week. Since 2014, there's been millions of listener downloads in 188 world nations. He has A-list show guests include top-selling personal finance author Robert Kiyosaki. Get Rich Education can be heard on every podcast platform, plus it has its own dedicated Apple and Android listener phone apps. Build wealth on the go with the Get Rich Education podcast. Sign up now for the Get Rich Education podcast or visit GetRichEducation.com.
You're listening to the show that has created more financial freedom than nearly any show in the world. This is Get Rich Education.
Welcome to GRE, from Brookline, Massachusetts to Brooklyn, New York, and across 188 nations worldwide. I'm Keith Weinhold, and you are listening to Get Rich Education. Just another shaved mammal behind this microphone here. I recently spent some time with the father of Reaganomics, David Stockman, in New York City, and sometimes an issue so critical surfaces that real estate investors need to step back and understand a broader force in the economy. 3 weeks ago here, I told you how the second and third way real estate pays you, cash flow and ROA, are sourced by your tenant's employment. And the future of your tenant's employment is influenced by tariffs and other policies of this presidential administration. This is going to affect rates of inflation and a whole lot of things. Now, an organization called the American Dialect Society, they actually name their word of the year, and this year it is shaping up to be that word, tariff. In fact, Trump has described that word as the most beautiful word in the dictionary, and I think we all know by now that a tariff is an import tax that gets passed along to consumers. When it comes to materials used in real estate construction, that's going to affect future real estate prices. Well, several key ones so far were exempted from recent reciprocal tariffs, including steel, aluminum, lumber, and copper. Exempted. Not everything was exempted, but those items and some others were. But who knows if even they are going to stay that way. And now when it comes to this topic, I think a lot of people want to make immediate overreactions and even posture like they're an expert and become an armchair economist. And I guess we all do a little of that, me included. But rather than being first on this and overreacting, let's let the policy, which Trump called Liberation Day last month when he announced all these new tariffs, let's let policy simmer a little and then bring in an expert that really knows what this means to the economy and real estate. So that's why I wanted to set up this discussion for your benefit with the father of Reaganomics and I today. In fact, what did Reagan himself say about tariffs back in 1987? This is part of a clip that's gained new life this year. It's about a minute and a half.
Throughout the world, there's a growing realization that the way to prosperity for all nations is rejecting protectionist legislation and promoting fair and free competition. Now, there are sound historical reasons for this. For those of us who lived through the Great Depression, the memory of the suffering it caused is deep and searing. And today, many economic analysts and historians argue that high tariff legislation passed back in that period, called the Smoot-Hawley Tariff, greatly deepened the Depression and prevented economic recovery. You see, at first, when someone says, let's impose tariffs on foreign imports, it looks like they're doing the patriotic thing by protecting American products and jobs. And sometimes for a short while it works. but only for a short time. What eventually occurs is, first, homegrown industries start relying on government protection in the form of high tariffs. They stop competing and stop making the innovative management and technological changes they need to succeed in world markets. And then, while all this is going on, something even worse occurs. High tariffs inevitably lead to retaliation by foreign countries and the triggering of fierce trade wars. The result is more and more tariffs, higher and higher trade barriers, and less competition. So soon, because of the prices made artificially high by tariffs that subsidize inefficiency and poor management, people stop buying. Then the worst happens. Markets shrink and collapse, businesses and industries shut down, and millions of people lose their jobs.
Now, from what I can tell, you, as a listener in the GRE audience, maybe you're split on what you think about tariffs. In fact, we ran an Instagram poll. It asked, generally speaking, tariffs are good or bad. Simply that, 40% of you said good, 60% bad. Over on LinkedIn, it was different. 52% said they're good, 48% bad. So it's nearly half and half. And rather than me taking a side here, I like to bring up points that support both sides and then let our distinguished guest talk, since he's the expert. For example, if a foreign nation wants to access the world's largest economy, the United States, does it make sense for them to pay a fee? I mean, it works that way in a lot of places. When you want to list a product on eBay or Amazon, you pay them a fee, you pay a percentage of the list price in order to get access to a ready marketplace of qualified buyers. All right, well, that's one side, but then the other side is, come on, let's look at history. Where have tariffs ever worked? Like, where have they ever been a resounding long-term success? Do they have any history of a sustained good track record? I generally like free trade. Then let's understand there's something even worse than a steep tariff. There are quotas, which are imposed import limits, trade limits, and then there are even all-out import bans. What do tariffs mean to the economy that you are going to live in and that your tenants live in? It's the Father of Reaganomics and I on that straight ahead on Get Rich Education. I'm your host, Keith Weinhold. You know what's crazy? Your bank is getting rich off of you. The average savings account pays less than 1%. It's like laughable. Meanwhile, if your money isn't making at least 4%, you're losing to inflation. That's why I started putting my own money into the FFI Liquidity Fund. It's super simple. Your cash can pull in up to 8% returns and it compounds. It's not some high-risk gamble like digital or AI stock trading. It's pretty low risk because they've got a 10-plus year track record of paying investors on time, in full, every time. I mean, I wouldn't be talking about it if I wasn't invested myself. You can invest as little as $25K, and you keep earning until you decide you want your money back. No weird lockups or anything like that. So if you're like me and tired of your liquid funds just sitting there doing nothing, check it out. Text FAMILY to 66866 to learn about Freedom Family Investments Liquidity Fund. Again, text FAMILY to 66866. Hey, you can get your mortgage loans at the same place where I get mine, at Ridge Lending Group, NMLS 42056. They provided our listeners with more loans than any provider in the entire nation because they specialize in income properties. They help you build a long-term plan for growing your real estate empire with leverage. You can start your pre-qualification and chat with President Chaley Ridge personally. Start now while it's on your mind at ridgelendinggroup.com. That's ridgelendinggroup.com.
Hey everybody, it's Robert Helms of the Real Estate Guys radio program. So glad you found Keith Weinhold and Get Rich Education. Don't quit your daydream.
When it comes to White House economic policy like tariffs, taxes, and inflation, don't you wish you could talk to someone that's often been inside the White House? Today we are. Even better, he was the official advisor to an ex-president on economic affairs, a Wall Street and Washington insider and Harvard grad. Today's guest is also a former two-time congressman from Michigan. He's a prolific author, and he is none other than the man known as the Father of Reaganomics. He was indeed President Ronald Reagan's budget advisor. He was first with us last year, but so much has happened since. So welcome back to the show, David Stockman.
Very good to be with you, and you're certainly right about that. I think we're really in uncharted waters. Who could have predicted where we are today? And therefore, it's very hard to know where we're heading, but you have to try to peer through the fog and all the uncertainty and the noise and the, day-to-day ups and downs that's coming from this White House in a way that we've never seen before. And I started on Capitol Hill in 1970, so I've been watching this, for more than a half century, actually, quite a while. And amazing. It's important to go through all this, but it's sort of uncharted waters.
Sure, it's sort of like you wake up every day and all you do know is that you don't know. And David, when it comes to tariffs, I want to give you my idea, and then I want to ask you about what the tariff objective even is. Now, to be sure, no one is asking me how to advise the president. I'm an international real estate investor, but I do most of my business in the U.S., and I sure don't have international trade policy experience. It seems better to me, David, that rather than shocking the world with new tariffs that kick in right away, it would have been better to announce that tariffs begin in, say, 90 days. And then give nations space to negotiate before they kick in. That's my prevailing idea. My question to you is, what's the real objective here? What are tariffs proposed to do? Raise revenue? Onshore companies? Merely a negotiation tactic? Is the objective something else?
Well, it might be all of the above, but I think it's important to start with a predicate, and that is that the problem is not high tariffs abroad or cheating by foreign, competitors or exporters. There is a huge problem of a chronic trade deficit that is not benign, that does reflect a tremendous offshoring of our industrial economy, loss of good, high-paying industrial and manufacturing jobs. So the issue is an important one to address, but I have to say very clearly, Trump is 100% wrong when he attempts to address it with tariffs, because foreign tariffs aren't the problem. Let me just give a couple of pieces of data on this, and I've been doing a lot of research on this. If you take the top 51 exporters to the United States, our top 51 trade partners, and this is Mexico and Canada and the entire EU, and it's all the big Far Eastern, China, Japan, South Korea, India, all the rest of them. If you look at and that's 90% of our trade, we have 2.9 trillion of imports coming in from all of those countries. And the tariff that we levy, this is the United States, on those imports is not high. It's higher than it was in the past, mainly because of what Trump did in the first term, but it's 3.9%. Now, compared to bad times historically, decades and decades ago, that's relatively low. But here's the key point. If we look at the same 51 trading partners in terms of the tariffs they levy on our exports to China and to the EU and to Canada and Mexico and South Korea and all the rest of them, the tariff weighted average that they levy is 2.1%. So let me restate that. The average U.S. tariff is about twice as high, 4% to round things, as what our partners imposed, 2%. Now, the larger point is whether it's 4% or 2% doesn't make a damn bit of difference. That's not a problem when it comes to 33 trillion of world trade, of which we are, the United States engages in about 5.5 trillion of that on a two-way basis, import, export, in the nexus of a massive global trading system. So he's off base. He's wrong. The target is not high tariffs or unfair foreign trade. Now, there are some people who say, well, you're looking at monetary tariffs. In other words, the import duty they levy on, exports to South Korea or India or someplace like that.
Right.
And that the real issue supposedly is non-tariff barriers. For instance, some governments require you that all procurement by government agencies has to be sourced from a domestic supplier, which automatically shuts out U.S. suppliers who might want that business. Well, the problem is we're the biggest violator of the non-tariff barrier in that area. In other words, we have something like $900 billion worth of state, federal, and local procurement that's under Buy America policies, which means EU, Mexico, Canada, China, none of them can compete. Now, I mention that only as one example because it's the kind of classic non-tariff barrier as opposed to import duty that some people point to, or they point to the fact that, well, foreign countries allegedly manipulate their currency. But, the answer to that is the number one overwhelming, no doubt about it, largest currency manipulator in the world is the Federal Reserve. Okay, so it's kind of hard to say that there's a unfair trade problem in the world because of currency manipulation. And then there is, an argument, well, foreign governments subsidize their exporters. They subsidize their industrial companies, and therefore they can sell things cheaper, and therefore that's another example of unfair trade. But the biggest subsidizer of tech industry and of a lot of other basic industry in the United States is the Defense Department. We have $1 trillion defense budget, and we put massive amounts of dollars in not only to buying, hardware and weapons and so forth, but huge amounts of R&D that go into developing cutting-edge technologies that have a lot of civilian applications that, in fact, we see all over the world. That's why we're doing this broadcast right now. The point is, the problem is not high tariffs, because they're only low tariffs. The problem is not unfair trade, because there's all kinds of minor little interferences with pure free markets, but everybody violates those one way or another due to domestic politics, but it's not a big deal. It doesn't make that big a difference. So therefore, why do we have $1 trillion trade deficit in the most recent year, and a trade deficit of that magnitude that's been pretty continuous since the 1970s? The answer is 3 or 4 blocks from the White House, not 10,000 miles away in Beijing or Tokyo. The answer is the Federal Reserve has
in the Eccles building there in D.C., not far from the White House.
Yes, right near. Okay, the Eccles building. The Fed has a huge, persistent pro-inflation bias.
Sure.
And as a result of that, it is pushed the wage levels and the price levels and the cost levels of the U.S. economy steadily higher, and therefore we've become less and less competitive with practically everybody, but certainly lower wage countries nearby like Mexico or China far away. And, it's not that simple of just labor costs and wages, because after all, if you source from China, you've got to ship things 10,000 miles, you've got supply chain management issues, you've got quality control issues, you've got timeliness issues, you have inventory carry costs because there's a huge pipeline, and of course you have the actual freight cost of bringing all those containers over. But nevertheless, when you factor all that in, our trade problem is our costs are too high, and that is a function of the pro-inflation policies of the Fed. Give one example. Go back just to the period when the economy was beginning to recover right after the Great Recession and, the crisis of 2008, 2009. I started 2010. Unit labor costs in manufacturing in the United States, just from 2010, that's only 15 years, are up 55%. That's unit labor costs. In other words, if you take wage costs and you subtract productivity growth in that 15-year period, the net wage costs, less productivity growth, which is what economists call unit labor costs, are up 53%. And as a result of that, we started, maybe with a $15 wage difference between the United States and China back in the late 1990s. That wage gap today is $30. In other words, the fully loaded cost of average wages in the United States, and I'm talking about not just the pay envelope, but also the payroll taxes, the charge for pension expense, health care, and so forth. The whole fully loaded cost to an employer is about $40 an hour, and it's about $10 in the United States, and it's about $10 an hour in China. Now, that's the reason why we have a huge trade deficit with China, because of the massive cost difference. And it's not because anybody's cheating. It's because the Fed, in its wisdom, decided, well, everybody will be okay. We're going to inflate the economy at 2% a year. That's their target. It's not like, well, we're trying to get low inflation or zero inflation, but we're not quite making it. No, their proactive answer is we've got to have 2% or the economy's not going to work well. Well, 2% sounds, well, that's a trivial little number. However, when you do it year after year, decade after decade, for a long period of time, and the other side is not inflating at the same rate, then in dollar terms, you have a problem, and that's where we are today. So this is important to understand because it means the heart of the whole Trump economic policy, which is trying to bring manufacturing home, trying to bring industry back to the United States, a laudable objective, is based on a false diagnosis of why this happened, and it is unleashed ball in the China shop disruption of global economic flows and relationships that are going to cause unmitigated problems, even disaster in the U.S. economy, because it's too subtle. When you think about it, the world trade system, just goods. Now, we're not even talking about services yet, or capital flows, or financing on a short-term basis. The world trade in goods, merchandise goods only, is now 33 trillion. That is a hell of a lot of activity of parts and pieces and raw materials and finished products flowing in, impossible to imagine directions back and forth between dozens and dozens of major economies and hundreds overall. And when you step into that, not with a tiny little increase in the tariff to give somebody a message, if our tariffs are averaging 4%, that's what I gave you a little while ago, and you raise tariffs to 20%, maybe that's a message. But Trump didn't do that. He raised the tariff on China to 145%.
Yeah.
In other words, let's just take one example of a practical product. Almost all the small appliances that you can find in Target or even a higher end retail stores in the United States or on Amazon are sourced in China because of this cost differential I've been talking about, this huge wage differential. So over the last 20, 25 years, it went there. Now, 80% of all small appliances are now sourced in China. And one, good example would be a microwave oven. And a standard one with not a lot of fancy bells and whistles is $100. Now, when you put 145% tariff on the $100 landed microwave oven, it's now $245. Someone's going to say, gee, are we going to be able to sell microwaves at $245? They're not certain. I'm talking about a U.S. importer. I'm talking about someone who sells microwaves on Amazon, for instance, or the buyers at Walmart or Target or the rest of them. They're going to say, wait a minute, maybe we ought to hold off our orders until we see how this is going to shake out. And Trump says he's going to be negotiating, which is another whole issue that we'll get into. It's a lot of baloney. He has no idea what he's doing. Let's just face the facts about this. So if orders are suddenly cut back, and the flow that goes on day in and day out across the Pacific into the big ports in Long Beach and in Los Angeles is suddenly disrupted, not in a small way, but in a big way by 20, 30, 40, 50%. 6 or 7 months down the road, we're going to have empty shelves. We're going to have empty warehouses. We're going to have sellers who suddenly realize there's such a scarcity of products that have been hit by this blunderbuss of tariffs that we can double our price and get away with it. Okay.
Sure.
So
I mean, ports are set up for steady flows, not for surges and then lulls in activity. That just really doesn't work.
And let me just get in that because you're on a good point. In other words, there is a complicated supply chain where, stuff is handed off one hand to another. Ports in China, shipping companies, ports here, rail distribution systems, regional warehouses of, people like Walmart and so forth. That whole supply chain is going to be hit with a shock. Everything is going to be uncertain in terms of the formulas that everybody uses. Right now, you know that you sell 100 units a week, so you got to replace them at the sales rate, and you put your orders in and know that it takes 6 weeks to get here and all this other stuff. All of the common knowledge that's in the supply chain that makes it work and the handoffs smooth and efficient from one player in the supply chain to the next, it's all going to be disrupted. But the one thing we're going to have is we're going to have shortages, we're going to have empty shelves, and we're going to have price, which I'm sure that Trump is not going to start saying price gouging of
Right.
But that's not price gouging. If you have go to Florida, we have a hurricane. We live in Florida and New York. We have a hurricane. All of a sudden, the shelves are empty and there's no goods around because everybody's been stocking up, getting ready for the storm. And then all of a sudden, the politicians are yelling that somebody's price gouging because they raised their prices in a market that was in disequilibrium. Well, that's not price gouging. That's supply and demand trying to find a new balance.
Basic economics.
When the demand is 100 and the supply is 35. Okay. But I'm kind of getting ahead here, but I think there's very good likelihood that there's going to be a hue and cry right before, maybe in the fall or right before Christmas about price gouging, and Trump then saying, well, I was elected to bring prices down and bring inflation under control. It's out of control because all of these foreigners raised their prices. No, they didn't. It was the tariff that did it. And all the people in the supply chain are trying to take advantage of the temporary disruptions. So I think people have to understand. And I can't say this, and I don't like to say it because I certainly didn't think the other candidate in the last election had anything to offer in terms of dealing with our serious economic problems in this country. I'm talking about Harris. But the fact is, Donald Trump has had a wrong idea for the last 40 to 50 years of his adult life. And that core idea is that trade deficits are a sign of the other side cheating. They're a sign that you're being exploited or taken advantage of or ripped off. Or it's not at all. Okay. Trade deficits are a consequence of cost differences between different jurisdictions. And to the extent that we've artificially, unnecessarily inflated our costs, we need to fix the problem at the source. He ought to clean house at the Federal Reserve. But the problem is Trump wants lower interest rates when, in fact, the low interest rates created all the inflation that led to our loss of competitiveness and the huge trade deficits we have today. So to summarize, it is important to understand, do not have faith in Trump's promise that we're going to have a golden age of economic prosperity. We are going to have a economic disaster, and it's a unforced error. It's self-inflicted, and it's the result of the wrong fundamental idea of one guy who's in the Oval Office right now, throwing his considerable weight around and pushing the economy into upheaval that really is totally unnecessary. He should have done what he was elected to do, and that's worked on getting production up and costs down. That's not going to be solved with tariffs.
David, I have another important point to bring up, but before we do, just quickly, are those 2 to 4% tariffs you mentioned earlier, those are the tariff levels pre-Trump second term, correct?
We could clarify that. Those are for the year 2023. That was the latest full year data that we have with great deal of granularity.
The point I want to bring up, is there any history that tariffs actually work? Some people cite the Smoot-Hawley Tariff Act from the 1930s and that it drove us deeper into the Great Depression. And David, on the one hand, when we think about do tariffs actually work, if Indonesia can make shoes for us for $11, why would we want to onshore an activity like that? That is a good deal for us. And then on the other hand, you have someone like NVIDIA, the world's leading semiconductor company. They announced plans to produce some of their AI supercomputers entirely on American soil for the first time recently. And you have some other companies that have made similar announcements. So that's a small shred of evidence that tariffs could work. But my question is, historically, do tariffs actually work?
That's a great question, and there's a huge history, and you can go back all the way to the 19th century where Donald Trump seems to be preoccupied. But what he fails to recognize is that they worked in the 19th century because they were revenue tariffs. It wasn't an effort to bring jobs back to America. We were booming at the time. Jobs were coming to America, not leaving. And it was the federal government's main source of revenue because, as you know, prior to 1913, there was no income tax.
Right.
So that was one thing. Okay. Then when we got into the 20th century and post-World War II, it became obvious to people that the whole idea of comparative advantage, going all the way back to Adam Smith, and that enhanced a global trade where people could specialize in whatever their more competitive advantage is, was a good thing. And so we had round after round of negotiations after World War II that reduced tariff levels steadily, year by year, decade by decade. So by the time we got to the 1990s, when China then, arose from the disaster of Mao and Mr. Deng took over and created all the export factories and said it's glorious to be rich and all these things, as we got red capitalism. But if we start in the 1990s, the average tariff worldwide, now this is weighted average on all goods that are bought and sold or imported and exported, was about 9%. And there have been various free trade deals done since then. For instance, we had NAFTA, and the tariffs on Mexico and Canada and the United States went to zero. We had a free trade deal in 2012 with South Korea. This never comes up, but the tariff on South Korean goods coming to the U.S. is zero. The tariff on U.S. exports going to South Korea is zero because we have a free trade agreement, and it's worked out pretty well with South Korea. Now, we're not the only ones doing this. Countries all over the world. The EU is a total free trade zone, an economy almost as big as the United States that used to have tariff levels between countries. Now it's one big free trade zone. So if you take the entire world economy, that 9% weighted average tariff of the early 90s, which was down from maybe 20, 25, 30 pre-World War II in this Smoot-Hawley era, was down to 2.25% by the time that Donald Trump took office the first time around in 2017. Now, 2.25% is really a rounding error. It's hardly, when you have $33 trillion worth of goods moving around, container ships and bulk carriers and so forth all around the world, and air freight and the rest of it, rail, 2% tariff is not any kind of big deal. As I say in some of the things I write, it's not a hill of beans. So somehow, though, 45 years ago, Trump got the idea that tariffs were causing a problem and that we had trade deficits, not because our costs were going up owing to bad monetary policy, but because the other guy was cheating. Remember, this is Trump's whole view of the world. It's a zero-sum game. I win, you lose, and if I'm not winning, it's because you're cheating, okay? In other words, I'm inherently going to win. America's inherently going to win unless the other guy is cheating. Now, Trump sees the world in the same way that I think he looked at electrical and plumbing contractors in the Bronx, in the 1980s and 1990s when he was developing his various real estate projects. these are pretty rough and tumble guys.
Push them around.
Easy way to make a living. So there's a lot of, there's a lot of pretty rough baseball that's played. That mentality that the other guy is always trying to screw me, the other guy's always cheating, the other guy's preventing me from winning is his basic mentality. And it's not applicable. It's not useful at all to try to understand the global economy, try to understand why America's $29 trillion economy is not chugging along as strongly and as productively as it should be, why real wages are not making the gains that workers should be experiencing, and so forth. So he ought to get out of this whole tariff, trade war thing, which he started. I don't know how he does. It's a little late. And focus on the problems on the home front. In other words, our trade problem has been caused by too much spending, too much borrowing, too much money printing on the banks of the Potomac. It's not basically caused in Beijing or Tokyo or Seoul or even Brussels, the European Union. And we need to get back to the basic and the real culprit, which is the Federal Reserve and its current chairman, Powell. If he wants to attack somebody, go after the Fed, go after Powell, but ought to give them a mandate to bring inflation to zero and to stop fooling around with everything else and to stop monetizing the public debt, that is buying government debt.
Take care of your own backyard first before you start picking on your neighbors.
Yeah, exactly. I've been in this for a long time. As I said, I started on Capitol Hill. There have been a lot of protectionist politicians, but they always argued free trade is good, but it has to be fair trade. And, we have this example in our steel industry, for instance, where producers abroad are competing unfairly for one reason or another. But the point I'm getting to is they always said this is an exceptional case. Normally, we would go for free trade, but we got to have protection here. We got to have a temporary quota. Even when I was in the Reagan administration, we had a big argument about voluntary quotas on Japanese car exports, and I was totally against it. I thought the U.S. industry needed to get its act together, get its costs down, needed to get the UAW under control because it had pushed wages, way, way, way too high in terms of total cost. But they argued, well, you're right, but we have to have 10 years in order to allow things to be improved and adjusted and catch up. So this is only temporary. This is protectionism, but it's temporary. It's an expedient that we can't avoid. And so therefore we'll make an exception. But there is no one. And most of these people were, in the payroll of the unions, or they were congressmen from South Carolina going to bat for the textile industry, or congressmen from Ohio going to bat for the steel industry, whatever. But there was no one who ever came along and said, tariffs are big, beautiful things, and we need to have permanent high tariffs because that's the way we're going to get prosperity back in the United States. It's a dumb idea. It's wrong. It's disproven by history. And people, even though Trump has done a lot of things that I like, he's got rid of DEI, he's got rid of all of this green energy, climate crisis nonsense, all of that he's done is to the good. When you come to this basic question, how do we get prosperity in America? The answer is through free market capitalism, by getting the government out of the way, by balancing the budget, and by telling the Fed not to, inflate the economy to the disadvantage that it has today. That's how you get there. And Trump is not a real Republican. Trump is basically what I call a statist. He's for big government, right-wing statist. Okay, there's left-wing Marxist statist, and there's right-wing statist. But, all of this tariff business is going to create so much corruption that it's almost impossible to imagine, because every day there's someone down there right now, I can guarantee it, at the, Treasury Department or at Commerce Department saying, but we got special circumstances here in terms of the parts that we're making for aircraft that get assembled in South Korea or something, and we need special relief.
Yes, every industry
you're doing
is putting in for the
everybody's going to be there. The lobby, this is the greatest dream that the Washington lobbyist community ever had. Trump is literally saying he put this reciprocal tariff. You saw the whole schedule that he had on that easel in the White House on April 2nd.
Liberation Day.
It was called Liberation Day. I called it Demolition Derby Day. There was a reciprocal tariff for every single country in the world based on a phony formula that said if we have $100 million deficit with somebody, half of that was caused by cheating. So we're going to put a tariff in place, closes half of the difference. I mean, just nonsense. Schoolboy idiocy. Now, it is. I mean, I know everybody said, oh, isn't it great? We finally got rid of the bad guys. Biden, he's terrible. And the Democrats, I agree with all that. But we replaced one set of numbskulls with another set. Unfortunately, Republicans know better, but they're so intimidated, apparently buffaloed by Trump at the moment, that they're going along with this. But they know you don't put 145% tariff on anything. I mean, it's just nuts.
David, I feel like you're telling us what you really think, and I absolutely love that. Interestingly, there is a Ronald Reagan clip about tariffs out there in a speech that he gave from Camp David, and it's something that's really had new life lately. In fact, we played the audio of that clip before you came onto the show today. Reagan said that he didn't like tariffs and that they hurt every American worker and consumer. As Reagan's economic advisor in the White House, did you advise him on that?
Yes, I did. And also, I can give you a little anecdote that I think people will find interesting.
Yeah.
The one time that he deviated in a big way from his free trade commitments was when he put the voluntary export quota on the Japanese auto industry. That was big. I don't remember the exact number, but I think it said they couldn't export more than 1.2 million cars a year or something like that in the United States, and the number was supposed to adjust over time. But we had huge debates in the cabinet room about those things. And at the end of the day, here's what he said. He said, I've always been for open trade, free trade. I've always felt it has to be fair trade. But, in this case, the Japanese industry came to us and asked for voluntary quotas. So I didn't put up a trade barrier. I'm only accommodating their request. Well, the Japanese didn't come to him and ask. They did, but only when they were put up to it by the protectionists in the Reagan administration, who took them on the side, their negotiators and maybe their foreign minister, I can't remember exactly who, commerce secretary, and said, if you don't ask for voluntary quotas, we're going to unleash Capitol Hill and you're going to get a real nasty wall put up against your car. So what will it be? Do you want to front for voluntary quotas, or are we going to unleash Congress? So they came to Reagan and said the Japanese industry said they're recommending that he impose voluntary restraints on auto exports. That was just a ruse. He wasn't naive, but he believed what you told him. He believed that everybody was honest like he was. And so he didn't understand that the Japanese industry that was brought to meet with him in the Oval Office had been put up to it, been threatened with, something far worse, mandatory quotas imposed by Congress. But anyway, it's a little anecdote. What happened, on the other hand, he continued to articulate the case for small government, sound money. We had deficit problems, but he always wanted a balanced budget. It was just hard to get there politically. And he believed that capitalism produces prosperity if you let capitalism work and keep the government out of the marketplace. And there is no bigger form of intervention and meddling and disruption in the capitalist system, in the free market, in the marketplace, than quotas on every product in every country at different levels. They're going to have 150 different countries negotiating bilaterally deals with the United States? That's the first thing. That's ridiculous. It can't happen. The second thing is they're going to come up with deals that don't amount to a hill of beans, but they'll say, we have a deal, the White House will claim victory. Let me just give one example. As we know, one of the big things that Trump did in the first administration was he renegotiated NAFTA. And NAFTA was the free trade agreement between Mexico, Canada, and the United States. Before he started in 2017, the trade deficit of the U.S. with Mexico and Canada combined was $65 billion. And he said, that's too big. We got to fix NAFTA. We've got to rebalance the provisions so that the U.S. comes out not on the short end of the stick, $65 billion. So they negotiated for about a year and a half. They announced a new deal, which he then renamed the United States-Mexico-Canada Agreement, USMCA, and made a big noise about it. But it was the same deal with a new name. They didn't change more than 2% of the underlying machinery and structure.
Semantics.
Well, now we fast forward to 2024. So the USMCA, Trump's pride and joy, the kind of deal that he says he's going to seek with every country in the world, is now 4 years into effect. And what is the trade deficit with Canada and Mexico today? It's $235 billion. Okay. It's 4 times higher now than it was then when he put it in place. Why? Because we have a huge trade deficit with Mexico. Why? Because, average wages there are less than $10 an hour, and they're $40 an hour here. That's why. It has nothing to do with a bad trade deal. It has to do with cost differences.
David, this has been great. And as we're winding down here, we have a lot of real estate investor listeners. Tell us what this administration's overall policies, not just tariffs, but overall policies, mean for future employment. And then tell us about your highly regarded Contra Corner newsletter.
Well, that's a big question. I think it doesn't mean good, because if they were really trying to get America back on track, our economy, they would be fighting inflation tooth and nail to get it down to zero. They would be working day and night to implement what Musk came up with in the Doge, and that is big spending cuts and balancing the budget. They're not doing that. They're letting all these announcements being made, but they're not actually cutting any spending. They would not be attempting to impose this huge apparatus of tariffs on the U.S. economy. But they're not doing that, so I'm not confident. We were going in the wrong direction under Biden, for sure, and we're going in an even worse direction right now under Trump. So that's the first thing. The second thing is, I put out a daily newsletter called David Stockman's Contra Corner. You can find it on the internet. But this is what we write about every day. And I say a plague on both their houses. The Democrats, the Republicans, they're all in many ways just trying to justify government meddling, government spending, government borrowing, government money printing, when we would do a lot better if we went in the opposite direction. Sound money, balanced budgets, free markets, and so forth. And in the process, I'm not partisan. I was a Republican congressman. I was a budget director of the Reagan administration. I have been more on the Republican side, obviously, over my career than the Democrats. But now I realize that both parties are part of the problem. And I call it the uniparty. When push comes to shove, the uniparty has basically been for a lot of wars abroad and a lot of debt at home and a lot of meddling in the economy that was unnecessary. So if you look at what I write every day, it tries to help people see through the pretenses and the errors of the uniparty, Democrats and Republicans. And in the present time, I have to focus on Trump because Trump is making all the noise.
100%. Yes, it sure has kept life and the news cycle exciting, whether someone likes that news or not. Well, David, this has been great. In fact, it sounds a lot like what Reagan might have told me, perhaps because you were a chief economic informant for him. Smaller government, letting the free trade flow, and lower inflation. Be sure to check out David Stockman's Contra Corner newsletter if you like what we've been talking about today. Just like it was last year, David, it's been a real pleasure having you on GRE today.
Well, thank you very much. And these are important issues, and we've got to stay on top of them.
Oh, yeah. Well, David Stockman, truly no mincing words. He doesn't like tariffs. In summary, telling GRE listeners that the problem with trade imbalances is inflation. Attack that instead. Quell inflation. Don't impose tariffs. A lot of developing nations and China have distinct advantages over manufacturing in the United States. Besides having the trained labor and all the factories and systems in place, think about how many of these nations have built in lower costs. They don't have to deal with these regulatory agencies. No EPA, no OSHA, and not even a minimum wage law to have to comply with. And here in the U.S., get this. 80% of American workers agree that the U.S. would benefit from more manufacturing jobs, but almost 75% disagree that they would personally be better off working in a factory themselves. That's according to a joint Cato Institute and YouGov survey. It's sort of like how last century Americans lamented the demise of the family farm. Yeah, but yet they sure didn't want to work on a farm themselves. Now, there are some types of manufacturing, like perhaps pharmaceuticals or computer chips, that could likely be onshored because those items are high-value items. Their value can exceed the cost of being produced in the USA, but a lot of these factory goods, not. Again, if these topics interest you, do a search for David Stockman's Contra Corner, or you can directly visit davidstockmanscontracorner.com. Big thanks to the father of Reaganomics, David Stockman, on the show this week. As for next week, we're back more toward the center of real estate investing. Until then, I'm your host, Keith Weinhold. Don't quit your daydream.
Nothing on this show should be considered specific, personal, or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Get Rich Education, LLC exclusively.
You know, whenever you want the best written real estate and finance info, oh, geez. Today's Experience limits your free articles access, and it's got paywalls and pop-ups and push notifications and cookies disclaimers. It's not so great. So then it's vital to place nice, clean, free content into your hands that adds no hype value to your life. That's why this is the golden age of quality newsletters, and I write every word of ours myself. It's got a dash of humor, and it's to the point because even the word abbreviation is too long. My letter usually takes less than 3 minutes to read, and when you start the letter, you'll also get my 1-hour fast real estate video course. It's all completely free. It's called the Don't Quit Your Daydream letter. It wires your mind for wealth, and it couldn't be easier for you to get it right now. Just text GRE to 66866. While it's on your mind, take a moment to do it right now. Text GRE to 66866. The preceding program was brought to you by your home for wealth building, GetRichEducation.com.